Hello, I'm Erin Simpson, the Chief Operations Officer at Encore Bank. In light of the recent bank failures, it is more important than ever to make sure that your deposits are fully FDIC insured. Most people don't realize that you can obtain insurance coverage in amounts greater than the standard $250,000. We at Encore Bank are committed to making sure that your deposits are fully insured and that you understand the process of how to obtain that coverage. We're going to show you a few quick and easy steps using the FDIC's ED calculator to show you how to obtain maximum amount of coverage possible and to show you where you're left uninsured so you can be prepared. Stay tuned with us as we walk you through this process now. This is the ED calculator on the FDIC's website. As we stated earlier, this is a free resource that's offered by the FDIC. It's very simple to use, and we're going to walk through different account types that are insured because coverage is based on the account type. The first step is to enter your bank here. We're going to use Encore Bank. We're going to first add a personal account with no beneficiaries. We're going to add a single ownership account. These are the ownership types that determine coverage through the FDIC. So all single accounts with no beneficiaries are added together and coverage is provided up to $250,000. For all joint accounts, the same. All joint accounts are added up based on the number of owners, and each owner gets up to $250,000 coverage for all joint accounts. And then when you have beneficiaries, it opens up another level of coverage, and we'll walk through each one of these. The first account is going to be a single with no beneficiaries. I'm going to use John and Jane Doe here, and it's really important when you enter account names here that you use the same names. That's how it categorizes and adds all the correct accounts together. Jane is living. And for purposes here, we're going to call this a single account so you can see how the different ownership categories work. For this example, I'm going to show an amount in the account that is greater than the $250,000 worth of coverage so that you can see the insured and the uninsured amounts. We're going to make this one have a balance of $400,000. Then we're just going to simply add this to the report. And then we're going to click Calculate Coverage, and here you'll see $250,000 is insured and $150,000 is uninsured. So now we're going to add another individual account with no beneficiaries just to show how these are added together to calculate coverage. I'm going to do the same thing I just did. Jane's going to be the owner again so that this adds to her other accounts. Again, I'm going to call this single, no beneficiaries. And this time I'm going to give her coverage of $100,000. Now you can see both accounts added here. There's $500,000 in accounts. Jane's only insured up to $250,000 because it adds all the single accounts up with no beneficiaries. And then you'll see that she has an uninsured amounts of $250,000. But we're going to show you a way that Jane could remedy this. So if Jane were to open up an individual account but add a beneficiary, then these funds would be insured. So now we're going to add a personal account, but we're going to add an account with beneficiaries. So we're still going to show that Jane's the owner here. Now we're going to show that her beneficiary is her grandson, Tim. The beneficiary is a person. So we're going to add another beneficiary here because each beneficiary gets $250,000 worth of coverage. We're going to go ahead and add Tom here. One reminder is when you're setting these accounts up, you have to let your bank know that you want to add a beneficiary. It's not automatically done, and you want to make sure that your account documents show each beneficiary. So make sure that you review those. We're going to call this account with beneficiaries. On this account, we're going to give this account a balance of $750,000. So once we add this to report and we calculate the coverage, you'll see that this account is insured up to $500,000, and that's because there's one owner, which is Jane, and then there are two beneficiaries. So each beneficiary gives $250,000 worth of coverage. So it's $500,000 insured, $250,000 uninsured. Well, if Jane were to open another account on her own with another set of beneficiaries, so maybe her granddaughters, then she could move that $250,000 there and be insured up to the amount of beneficiaries on that account. We're going to add another account, and this time we're going to add a joint account. This account will be a joint account with no beneficiaries. So the owner here is going to be Jane and also John. They're both living. And we're going to call this joint. We're going to give this account a balance of $600,000. When we calculate coverage on this account will show that it is insured for $500,000, and that's because on a joint account, each owner on that account gets coverage of $250,000, which you'll see here. So Jane, we divide the balance between the two owners, so each has $300,000. Then that account, those balances that are split are insured up to the $250,000. So you can see here that the insurance coverage for both Jane and John is $500,000. They're left with $50,000 each uninsured. Now we're going to add a business account. For business accounts, if the account is a sole proprietorship, that is considered a single ownership account because the account's tax ID number is that of the individual. That gets included and added to the single ownership accounts that we showed earlier, where Jane is the only owner and she has no beneficiaries. So those would all be grouped together. If you have any other type of business that has an EIN rather than a TIN, so a corporation, a partnership, or an organization, those get a separate category of FDIC insurance coverage, which we're going to show here. The business name, we're going to call this Jane Financial Service. We're just going to give her just a fake EIN here. We're going to call this business, and we're going to give her a balance, account balance of $300,000. Now we're going to calculate coverage, and so we'll show the business account here. And so all of Jane's business accounts under that EIN will be added up, and the balance in those accounts are insured up to $250,000. So if we added another business here under Jane's Financial Service with the same EIN, she would only be able to obtain coverage totaling all of those accounts up to $250,000. So now you can see that of all Jane's balances that she has $2.15 million, $1.5 million of that is insured, and $650,000 is uninsured. What we would do is work with Jane to provide her other options on the business accounts and on her individual accounts. On her individual accounts, we would open other accounts with other beneficiaries to ensure she has enough coverage. And on the business accounts, we would offer her other products, such as IntraFi products, or you may be familiar with products called Cedars. The bank can offer up to $150 million worth of FDIC insurance coverage through those products, so make sure that you ask your banker about those if you're a business owner or an individual interested in those with higher balances. See, this process is very easy, it's very simple. You can continue to add other accounts, you can build onto this, and you can restructure as many times as possible. If you have any questions about this, our bankers here at Encore Bank are happy to walk through this process with you. We can print these reports out for you and show you exactly how we came up with these calculations and explain this to you. There's a print button here at the bottom. You can do this yourself, or you can do this with the assistance of your banker. And then you can also work and help family members and friends, and you can create another report here. We hope this is helpful and makes this stressful time in banking a little bit easier for you. If you have any questions, you can contact any local Encore bank for additional assistance. Our bankers stand ready to help you and to make sure that you feel comfortable and that your deposits are fully insured.